business scene.
Hey everybody, thank you for tuning in for another episode of the Business Scene here on the Tulsa Scene podcast. I am Brittany Harlow.
I'm Kelly.
This is Kelly Tidwell. And joining us today, this evening, whatever time you're watching this, is Neil J. with J and Associates PC. So why don't you tell everyone what you are, Neil, and what you do and where you are at, all that good stuff.
Okay, great. Thank you, Brittany. I appreciate the intro. Yes, my name is Neil J. I'm a CPA in Tulsa, Oklahoma. We are a small 9 or 10 person business, depending on exactly, when in the year you catch us. A lot of seasonal work. We specialize in tax, business valuation, bookkeeping, compilation reports, things such as that nature. Really pretty much a full spectrum practice, short of really offering audit services at this time. We really don't do that anymore. Most of our businesses are between about 5 employees and 500. We do a lot of, service-oriented businesses, a lot of physician practices, a lot of medical, legal, things such as that. So a lot of small mom and pop businesses as well. So, we kind of have our hand in a whole lot of things. So, but my firm's been around since 1977. Hopefully I don't look that old. I'm second generation, bought my father out about 10 years ago, and we've been running it ever since then. And we have a nice little practice. So.
Yes. Wonderful. Well, again, thank you so much for agreeing to speak with us on what we know or are learning as a very sticky tax year. And obviously, we don't want this to be a 3-hour conversation. We never do that to you. But we would like to kind of get your take on what makes this year different than years previous.
Okay. Well, just about everything makes this year unique. One, just from COVID in general and having to kind of shift the way we operate on a day-to-day basis. We've had a lot of time working from home and doing things different than we've ever done before. But it's worked out well. But really, as far as like daily change for a business to operate in this environment, a lot of challenges, obviously, just things you never thought would be a problem, or, supply problems, things such as that, to all the legislation that's been coming down. And the legislation has really kept us hopping this year. It's been very unique in the fact that a lot of it's been past legislation and then try to figure out what it means after the fact, rather than, things happening, before. But, speed has been a priority, getting money out to the public, the PPP loans, for example, and the small business lending, and just trying to help people survive. A lot of the typical dialogue you get and a lot of the information you get has been slow to be released, and it's kind of trickled out throughout the year. So there's been a lot of professionals have to try to interpret what they think is going to happen and how they think it's going to flow. So there's going to be a whole lot of times where I say you need to speak with your own CPA on that and get their own opinion, because a lot of what I say will just be opinion until they kind of formalize some of that. So.
And so even like, obviously people like ourselves have been really looking forward to potentially getting some taxes back. And,
Sure.
We have another CPA that has been doing our taxes for years. And we're like, well, we didn't get your normal packet that you send out this year of like, they were supposed to, and they had that was when we first discovered that things were different. And I was like, well, that's okay. I'm still waiting for some documentation and that stuff. And they're like, well, even if you had got your packet, they had pushed back the filing deadline or they had pushed back the filing period open. And so that people can't even file their taxes until February 12th, correct?
That's correct. That's about 2 weeks later than typical. So usually right around the end of January, when your W-2 flows, that's when they pretty much open it up and are prepared to file. But, the IRS has been under tremendous pressure, along with all the state and local agencies this year. Anybody handling tax issues, they've all been working from home. At certain points throughout the year, if you were filing anything by paper with the IRS, they weren't even opening their mail. There was periods of time where all the IRS locations basically had semi-trucks full of tax returns or amended tax returns or documents just piled up, and they're all backlogged. So, timing's been bad. People really are just going to have to learn to be patient. over the past 5 to 10 years, we've really seen a slowdown of kind of taxes in general anyway, just due to the volume and especially the amount of pass-through entities that are out there. And so, really, it's unique anymore. Our tax season's very compressed. With our clients, especially individual clients, about every one of our clients shows up about March 1st to March 15th, which gives us about a 2-week window to try to get as many returns in as we can before we just move to pure extension. So the word extension is becoming commonplace. And it's just because the compressed tax season is just so much. I typically refer to, when people ask why it's taking longer and why things are slower, I basically say, well, imagine if you're next to a giant venue that has a, 20,000 person basketball game going on, and, it lets out and you're the restaurant next door. Well, there's only so many people they can bring in and feed. And that's the same thing with what's happening with tax. It's just, the amount of time that we have to get people in and out is just so compressed. So, but yeah, this year's definitely thrown us a loop, and the tax and IRS and everybody else is behind as well. And then I imagine you're probably going to see that W-2s and 1099s, typically that you see at the end of the month, you might see trickle in the middle of the month of February. I don't think that's going to be unheard of. So people are going to have to be a little more patient than usual. So.
Now, as far as like, people, claiming, like, obviously a lot of people were on unemployment last year, more than normal. Other than them, I assume that like they basically just claim that as income. Like, will they get something from the government, or are they just supposed to be keeping track of that? Or
yeah, your unemployment claims for the most part are all going to come from your state and local agencies. So they will produce a 1099. So be on the lookout if you were unemployed for a period of the year. You will see that in a document, and that will be something that your preparer will need to utilize to finish your return. So that will be unique to a lot of people this year. There's also a lot of different things in the tax code. The stimulus program this year, where people were getting refund checks, or really I shouldn't say refund checks, rebate checks throughout the year, because it really is a rebate, and that is part of what's called the recovery rebate credit. And that will be factored into your 2020 return, whether you got the credit or you didn't get the credit. So for many people who did get the credit, they will need to provide that information to the preparer so they can actually put that in and say how much you actually received on the stimulus. But the good news is if you did not receive that credit, if you did not get that check in the mail, then that credit is available on your 2020 tax return. So people can still take advantage of that. And if you lost your job in 2020, but maybe you had a good job in 2019, well, the credit was factored based on your 2019 return, but it was a 2020 credit. So that credit is actually due now. They just pushed the money out early. So if you did not get that money early, that deduction is going to be available to you on this year's tax return if your income dropped and got you maybe below the limits where you were above the limits previously. So that information will be important.
Is there any other kind of, obviously, I know that, while there are a lot of businesses in this community, statewide, nationwide, that, have managed to stay afloat and, stay in business during the pandemic. But obviously last year was a very hard year for a lot of businesses. Is there anything out there that maybe we don't know about, like tax credits for people that have faced hardships from COVID?
Absolutely. Really, there's a lot of things aimed at employers, and a lot of them kind of go in tandem with those PPP loans, the Paycheck Protection Programs that were out. So if you recall back in March, there was a tremendous amount of funding the government was pushing out. And essentially what they were doing is they were utilizing businesses to basically be their arm of an unemployment group right there. They were trying to keep people on payrolls because they knew if they could patch it for a little while and keep people on payroll, perhaps we were going to climb out of this and everybody would retain on payroll rather than there being a raid on unemployment. And they were really trying to protect against that. So the PPP was kind of the first big step, that along with what they call the EIDL, which is the Disaster Recovery Program. Those are the first two things to drop. And the PPP was very, very successful in keeping people on payrolls. And so that was the first big relief for small businesses. Along with that came a couple different credits. There was a couple, and really where you saw these, take place were through payroll tax returns. So they weren't so much income tax credits, but if you did not take advantage in your payroll tax returns, you still may have an opportunity to go back
Know
and amend
someone
those if you
or a
need
local
to.
business you think
So
should be
there's
featured on the Tulsa
the
Scene
sick and family
podcast?
leave that was
Head
out
to
there. Really, that was a little deceiving because it wasn't so much a credit
www.thetulsascene.com
as more
and
of
let
a
us know
chance to
today.
defer payroll taxes. If you had somebody that had a COVID issue, you had the opportunity to push out the payment date on that, which those will start coming due in 2020 unless there's, I'm sorry, 2021, unless there's additional legislation that occurs. The other big one out there was another piece of that, which was the employee retention credit. And that was a significant credit. And that again was done through your, what they call a 941 quarterly tax report. And that was potentially up to a $10,000 credit that you could take advantage of through your 941s. Now that had some issues as far as if you got PPP money, if you could take the credit, and there was some legislation back and forth on that. So I would tell you to refer to your tax professional before you try to go back and amend 941s to see if you're eligible. But that was a significant credit that happened throughout the year. So
sounds like, as you said, a lot to sift through, for lack of a.
It's a lot to digest, especially when they do things through payroll. Payroll's immediate. I mean, everybody's paying payroll every 2 weeks or twice a month or once a month. So when they start putting things into payroll, that's when they really show that they want to inject capital into the market or into the economy as fast as they possibly can, and that's the fastest way to do it. And so there was a lot of work through payroll this year that people need to be at least aware of.
So speaking of what people need to be aware of, obviously with this unique, everyone is still wanting, as much of their money as possible. Everyone's wanting to kind of maybe get this done and over with as far as kind of wading into this tax season. What can people do to make it easier for you? Like, should people wait longer till they have all their documents? Is the earlier the better? What should they kind of have with them?
I will tell you, one of the hardest things about when you're a tax preparer is when you get pieces of information throughout the year. I've got some clients that will drop, a document at a time on me, and that's very difficult to make sure you, one, have everything, and two, you did not miss something. So when stuff comes in one at a time, you don't know when to stop. You don't know when the last document that you're getting came in. And so that's a very difficult situation. So typically what I recommend to my clients is when you have the vast majority of your information together, when you have the bulk, that's when it's time to make the appointment and come see me. If you're missing a K1 from a small business or something like that, those are very typically late because, the filing deadline on those is March 15th with the potential to extend that for 6 months. So it could be September 15th before you ever see that document. Well, I'm going to need information to get you extended and take care of you before that document rolls in. So if that's the last hanging thing out there, don't wait for that. Get your stuff in, and then just make sure you're very clear about communication and telling me what it is you're missing, what you don't have. And from that perspective, once I know that, then we can estimate, get you ready, do 95% of the return, and then just drop the things that we know are missing later. But again, I will say it's a lot of work on a preparer if things come in, a piece at a time. That's tough. So
for those of us that will be needing extensions, when's the last day to file for extensions? Is it still April?
Yeah, and I'm glad you mentioned that. Kelly, that's a good thing to get out there because last year they moved the due dates around pretty significantly. Everything got pushed back until July 15th last year. That is not occurring this year so far. So everything is back to the old. Everything is back to April 15th. It is just like it's been. In my opinion, last year worked really well by pushing those dates back. It was very helpful. It eliminated some of that compression, and it allowed us to do better work and better estimates by that 7/15 deadline. But, obviously there's monetary reasons for keeping the deadlines where they are. It does throw quarterly payments and things like that off for some taxpayers when all of a sudden they have 2 payments due in July rather than spreading it with the April 15th and then the July 15th. But I will tell you, it is going to, it is back to normal. So people do need to be ready for that April 15th deadline. S corporations, things like that, they're still March 15th for those corporations. So you need to have everything in before then. If you get an extension, again, it's another 6-month extension. But individuals, 415, you can get another 6-month extension from that. But when I say extension, that's only extension to file, not to make sure you pay. So you do need to know generally what you owe, and that does need to go in with that extension.
Interesting. So my last question for you, obviously, I have still from the beginning of this conversation, like the visualization of a bunch of tax returns and trucks parked outside the IRS.
Right.
So how are you, feeling as far as you guys are doing everything that you can to get these returns ready to go, sent in, filed? Are you expecting that there's going to be a delay with the IRS as far as processing them all?
It depends on what you're filing. So when they came out with e-filing, gosh, I guess it's been 15 years now that e-file really kind of, became the norm. That was a great thing. It put a lot of burden back on the preparers to make sure they had all the documentation, had sign off, had authorization. The paperwork that goes in for us to have permission to file for somebody else is pretty extensive. So the IRS did an effective job pushing that back on us, but that's okay. I kind of like that because now we have control. So the best thing about electronic filing is we get to determine when that goes in. We get to hit the button. We get to push it through. So as long as you're e-filing, I don't expect anything unusual. The only thing that would really slow up an e-file is if you just had something really unusual on your tax return that was a major departure, maybe from a year ago, or you don't have your estimated tax payments right, or something doesn't match an IRS record. If that occurs, it's going to slow things down. But as long as everything matches and everything, connects, it should go through relatively quick, and your refund should turn around in about the same amount of time. The paper is the problem. So, there's certain returns that the IRS cannot accept electronically. They're changing and they're getting better every day. They have a huge job. But amended returns, up until this last year, you haven't been able to electronically file. And so if you had to go back and make a change or amend, you had to do that on paper. And so that would slow down. Dealing with notices, typically you cannot communicate with the IRS electronically, which is a good thing. It prevents fraud, and it makes sure that, you hear all these horror stories about people getting emails from the IRS. Well, the IRS doesn't email. They just don't do that.
Yeah.
So everything's through traditional paper. Which all that gets slowed down. So if you have to respond to a notice by mail and things like that, those are the things that are taking a long time. And we saw some slowdowns with just payment processing. So people would cut a check and pay their electronically filed return with their voucher, and that was taking a long time to go through. And they possibly got a notice because the e-file went through and they said, hey, you haven't paid your return, when it was out there sitting in a truck. So there were some things like that that didn't go through super clean. But I do anticipate this year being better. Hopefully, people are back in the office and they can process the paper better this year.
Right. Well, thank you so much for your time, Neil. You
Sure.
have given us so much to think about and so much, preparation,
Yeah.
a better word, going in to this tax season. Why don't you tell people how they can get a hold of you, maybe, if they have any more
Sure.
questions direct for you?
Yeah, no, I'm always available to answer questions. We're located in Tulsa, Oklahoma. Telephone number is 918-492-0106. I would always recommend a call over an email or anything like that this time of year. Just reach out and touch, us that way. Email, if I haven't talked to you in the past, never know, it could get thrown into a junk mail folder or something like that. So I prefer the phone call. So yeah, but we'd be glad to field any questions. And if we can ever follow up and help, we'd be glad to.
Awesome. Thank you so much. And
Yeah.
of course, thank you everyone for tuning in to this episode. We hope that you've learned a lot and are getting ready to file those taxes and maybe, get your stuff together. You have a little more time in the beginning, but not at the end. So that's the best thing maybe to keep in mind for that. And we'll catch you next time. I'm Brittany again. If you have any questions for this business segment, for any of our guests, or if you want to be featured on our business segment, reach out to me. My email is bharlow@verifiednews.network. That is where you will find all of our news stories, business and otherwise. Verifiednews.network is our website. This is our esteemed co-host, Kelly. If you have any questions for him, you can also send those to me. But we will catch you next time here at the Business Scene, your source for all things connected to the Tulsa business scene.
Thanks, Neil.
My pleasure. Thank you all.